again, everyone, and welcome to Tea Time with Coach Felly. And today I am featuring not just a new tea, but also a new cup in a very cute tea set. And thank you so much, Amy. Amy is my accountant. She is from this company called Exceed Corporate Services. They have been taking care of my accounting and bookkeeping as well as tax filing needs for quite a number of years now. Thank you so much for the lovely gift. She knows I do this, and this is a gift from me winning a quiz that she threw in our networking meeting last week. The tea is also quite special. As you can see, it is blue. This is a blue pea flower tea. It's supposed to be very rich in antioxidant. That is a gift from my other friend, but I'll tell you about her next time. So let's get going with today's episode. Since today I am featuring a cup from my accountant, I thought it would be appropriate for me to talk about cash flow management. Yay! So this is an area that not many people love to look into. That is why we have accountants, so that they can watch over our books. But this is a key area where some businesses don't do well, or in fact they run into a lot of trouble, not because they do not have sales, but they do not manage their cash flow very well. So today I want to just give you a very quick few pointers so that you can do your checks and balances, no pun intended, so that you can ensure that your cash flow remains healthy. I tried to come up with an acronym for it, but I couldn't find a better word than PRISM. Oh, what a mouthful. PRISM, P-R-I-S-M. Yeah, so let's start with P and R, which are you guessed right, payables and receivables. Payables, things that where the instances where you need to pay somebody, people who have sent you your bills to pay. And obviously receivables are when people are supposed to pay you money, right? When you send invoices and you are supposed to be paid. So these two, in some cases, I have observed that in some companies, they are very enthusiastic to settle their payables. So they are very eager to pay other people, and they are very slow in collecting their receivables. They are very slow in collecting money that people owe them. In fact, from some of the case studies that I've seen, or some of my past clients that I've worked with, some of them are very reluctant to ask their customers for money. I don't know, maybe it's a psychological thing. They feel that, oh, I have a good relationship now, and if I do ask them for money, maybe it will jeopardize how they will perceive me. However, guys, in some cases, the services were all finished, right? It has been rendered, everything has been delivered, and yet they still do not dare to collect the money. So this is where sometimes companies with great sales can still run into cash flow problems. So my very quick tip for you on the areas of P and R, payables and receivables. Of course, I'm not gonna tell you to, hey, don't pay your suppliers. No. But just pay them on time. I have seen cases where people pay them like way in advance. They don't understand that the money that remains in your bank account can be then used for other things. Maybe it is your inventory, maybe it is your marketing and things like that. So if the invoice is due on the 1st of May, pay them on the 1st of May. I've seen some companies, they are so eager, like I say, well, they will pay like a month in advance. And then when it is their turn to collect the money, they take forever to collect money from their customers. And as a result, again, it is like that. And the other thing is this. Sometimes it can also be your supplier thing, right? Can you negotiate a better deal with your suppliers where you don't really have to pay them that quickly? The best is if you have this trust-based relationship with your suppliers, such that they allow you to pay them once you start making some sales from whatever you get from them. So look into your payables and your receivables, because there's this thing called the cash gap. If you pay other people very quickly and you take forever to get paid, maybe in some cases, if it's a product-based business, it takes a while to sell off your inventory, you may jolly well be in a cash-strapped situation, even though you may have sales coming in pretty consistently. So look into how you can negotiate, better term, how do you negotiate even with your clients so that you get paid a bit more on time. Some company provides incentive, like they add a little bit of value for the package, like when people, for example, If they ask me, Fel, can I, instead of paying you every single month, can I pay you lump sum for a few months? Oh yes, so what other incentives that I can throw to these people? Right? And this way it's a win-win situation. You don't have to chase money all the time, and the client gets a little bit of value add from paying in a lump sum, maybe every quarter or every half a year. On the supplier side of things, try and negotiate whether you can have a better deal if you keep going back to them. Once they have established the trust, can you get even maybe like better payment terms where you don't have to pay them so early or so much, or maybe you can pay them in stages as you start selling your things in your business. So that is one, payables and receivables. Look into your cash gap. Make sure that you are not overly eager to pay people and take forever to collect money from your customers. The I, PRISM, right? The I stands for inventory. This is another case where I have seen where companies are again still having good sales, however they overstock. They're so eager and, well, Fel, if I buy a little bit more inventory, I can get a slightly better price, and because of that they ended up buying way more than they can sell in the near future, and a lot of their money is tied up in inventory, and this again can eventually cause cash flow problem. So again, when you look at your inventory, you want to be able to test and measure how much of the inventory that you keep are really flying off the shelf every single month. You want to be able to do projections so that you do not over order. The suppliers will always try to incentivize you coming up with some deals that seem very attractive at the time, but please do not overcommit, because again, when the money is with the goods, it will take time until you sell the goods. Sometimes it will prevent you from, for example, investing in your marketing so that the products will actually sell. Yeah, so again, look at your inventory level. Make sure that you have the inventory on the other end of the spectrum. Make sure you do have inventory to bring in the sales, because in some cases they are so afraid to get inventory to stock up. They are so afraid not being able to sell. In the end, they have nothing to sell. So that obviously will also cause a different kind of cash flow problem. My tip for you, make sure you monitor your sales month by month, and you make sure you know down to the type of items, which ones are selling better, which ones are selling slower. Don't buy the same quantity for everything. Always make sure that you stock up more. This seems very logical, guys, but some people don't do it. Make sure that you stock up more of the fast moving product, and make sure that you have strategies to move your slow moving goods. I've seen some businesses where they have products that are like 2-3 years old and it's still sitting there occupying space. Luckily there's no expiry date, but I wouldn't know what's the condition of the product after 2-3 years sitting on their display, right? So that's the third one, right? Inventory. Though the last one, S&M. S&M stands for sales and marketing. So I want to look at both of them. The sales part, you make sure you know how to set the right sales goals. Set the right sales goals that don't just cover your variable expenses, but also make sure you factor in your profit goal, so that you set your sales goal with the aim of making X dollars of profit. If you do not set profit goals, again, cash flow problem. Because I have seen one case study where this company, when I was asking them, so how do you set your sales goal for your team? She was like, well, I normally will see roughly what is my monthly expenses, and then how much I need to break even, and then from there I work out a number, and yeah, I gave the target to my team. And I'm like, so you work out the sales goal from the break-even point. So this is why she was complaining that she has run business for so long. She is just breaking even every month, because you're setting your sales goal based on break-even numbers. So make sure that you are setting your sales goal factoring in a profit goal. So if, let's say, for example, you know that your expenses, both your variable and your fixed expenses, add up to $10,000 a month. You want to make profit of $5,000 a month. You should make your sales goal, work it backwards, know your margin based on $15,000 net, right? The sales that you can cover $10,000 expenses and still have $5,000 profit on top of that. And that leads me to the last one, which is margin. Do you measure your margin every month? Do you even know what is your margin like at this moment? Because some people were like saying, Fel, I have pretty good sales, but I don't know why. Nothing seems to be going into my pocket. It seems that all the money goes back to the operations. So when we look into their books, we discovered that their margins are very, very unhealthy. Some of their staff were not productive, so there were unnecessary manpower expenses. And on the other front is that they have not increased their prices for 10 years. They were so afraid that a slight price movement will drive away all their customers. Even though they have a large number of customers that have been with the company as customers for a very, very long time, because they like their services, they feel that the company is reliable, but they are just so afraid of moving that price point even by that 5 to 10%. But guys, inflation alone is already driving up the price. If your price is the same for 10 years ago and now, that is probably why your margins are suffering. So look into your pricing and also work out pockets where you can improve your overall profit margin. For example, by looking at which of your inventory seems to have the highest value proposition, and hence people are willing to pay a little bit more for these products. So you may even set different margins. Maybe you can have a slightly better margin for your most popular product, because these are the ones that are already in demand constantly, and a slight price movement may not be so noticeable after all. So with the healthier profit margin, with the same amount of sales, at least you will feel that the cash flow is not so tight. I still have money to do what I want to do. I still have money to pay myself as a business owner. So there you go, guys. The 5 things, PRISM, PRISM. And of course I have to show off this cup again. I like it so much. Payables and receivables. Make sure that you always know both numbers. Don't be over eager to pay other people. And make sure that you do have a system to make sure that people pay you on time. I stands for inventory. Making sure that you don't overstock, but you also have enough stock to make sure the revenue continues to come in. Last but not least, sales and marketing. Make sure you set your sales goals based on a profit break-even point, and the margins, making sure that your pricing is geared towards having a healthy profit margin so that you can keep that cash flow healthy, and with that, less stress in the business, and the business will continue to serve you, not the other way around. So I hope you do find this one useful. It is a little bit more brainy episode, but again, cup from accountant, so I have to do her justice. Please send me your thoughts, send me what you find is useful for you, and ask me more questions. What are the things that you want to hear about? What are the things that you have challenges with in the business? And obviously, don't forget to like and follow me, and forward this episode to any businesses who tell you, oh, I'm a little bit stressed, the cash flow is a little bit tight, you know. And with that, Coach Feli will go continue her tea. See ya!